Hello everyone and welcome back to my channel. You are watching The Wealthy Brains and now let's get in this video. Cathie Woods is keeping the faith, even in the face of Bitcoin's massive plunge that had wiped $500 billion from the coin's peak market value at one point. Stay with us until the end and don't forget to subscribe to the channel. Cathie Wood has made some pretty incredible predictions in recent years. Her targets are often among the most mind-blowing bullish of any analyst or fund manager anywhere. Accordingly, her view on where Bitcoin and Bitcoin prices could be headed may not necessarily surprise many investors. That said, on a day when Bitcoin and the other cryptocurrencies imploded, she announced a whopping $500,000 price target for Bitcoin. Keep watching and get to know her recent updates about Bitcoin. Now, Miss Woods is probably one of the greatest stock promoters of all time. Her views on hypergrowth stocks have actually turned out to be quite on the money in recent years as a bull market and growth stocks took hold. On previous dips, she's held firm with her assertions. She's also doubled down on beaten up hypergrowth stocks. Her aggressive strategy has paid off for investors in the past. However, some investors appear to be concerned with such an aggressive approach in the face of what could be a massive correction for growth equities, if inflation concerns do result in rising rates and a bear market for growth stocks. All that said, let's take a look at Miss Wood's incredible Bitcoin prediction. After all, she might be right. We go through soul-searching times like this and scrape the models, and yes, our conviction is just as high, she said. Cathie Wood, the founder of ARK Investment Management, said Bitcoin, which has lost up to 50% of its value in the last few weeks, has come under pressure from institutional investors concerned about its environmental profile. It was precipitated by the ESG movement and this notion, which was exacerbated by Elon Musk, that there are some real environmental problems with the mining of Bitcoin. A lot of institutional buying went on pause, she told Nathaniel Whittemore in a pre-recorded interview broadcast Thursday. Musk's electric car company Tesla recently announced that it has suspended accepting Bitcoin for payments due to environmental concerns. However, Musk has confirmed that Tesla has not sold its Bitcoins. Furthermore, when the price of Bitcoin plummeted this week, Musk tweeted diamond hands emojis suggesting that Tesla will not sell its Bitcoins. Referring to the environmental concerns some people like Musk have, Wood detailed. We believe that even this is going to change because, first of all, right now the percentage of Bitcoin mined with renewables and hydroelectric power is quite substantial. I think in China it's over 50% in renewables. She also referenced a paper ARK Invest wrote with Square Inc., arguing that Bitcoin is the key to an abundant, clean energy future. This week, ARK also argued that Bitcoin mining could be a net positive for the environment. Musk, who had buoyed markets by saying Tesla would buy Bitcoin for its treasury and accept it as payment for its cars, reversed course on the latter, sending prices downwards. Elon probably got a few calls from institutions. Wood said, "I noticed that BlackRock is Tesla's number 3 shareholder and Larry Fink is the CEO. He is focused on ESG and especially on climate change. I'm sure BlackRock registered some complaints and perhaps there are some very large holders in Europe who are extremely sensitive to this." Wood, a storied innovation investor, remains confident in the future of Bitcoin, which she described as the first rules-based global monetary system in the world. Recently, speaking to Bloomberg, she forecast the cryptocurrency will go to $500,000. In her consensus appearance Thursday, she predicted central banks will begin buying crypto assets for their balance sheets and that Musk will prove positive for Bitcoin in the long term. Prominent figures like Lawrence Summers and Ray Dalio have recently warned that government and central bank spending could push up inflation this year, but Wood, who is known for bucking conventional wisdom, said deflation is more likely. She predicted a significant fall in commodity prices and that technology like artificial intelligence and blockchain will serve to hold down business costs. As time goes on here, we are thinking that the much higher probability is deflation. I know most people think that's crazy given what's going on, but we have seen a crack in some commodity prices already, she said. That in turn could lead some policymakers in emerging markets or even the Eurozone to adopt hard money, including Bitcoin. In emerging markets, if commodity prices come down, a lot of them are linked to commodity prices and their currencies will come under pressure, she said. I wouldn't be surprised if some of these emerging market central banks start accumulating Bitcoin because they know their currencies are going down and then that they will be under attack as reserves go down. In his own appearance at Consensus this week, Dalio said Bitcoin could become a victim of its own success, that governments will try to ban it as it becomes a competitive threat. But Woods said governments have learned that innovation is key to The long-term growth and that technology, be it cryptocurrency and the internet before it, and it can't really be stopped. They're all trying to say, let's have a better regulatory footprint here so that we attract more innovation. And I said that that is going to happen with, or already is happening with, cryptocurrencies, she said. Wood said she was very happy to see Gary Gensler, who is known to be open-minded towards cryptocurrency, installed as the new head of the Securities and Exchange Commission alongside Valerie A. Chekpanik, who leads the body's strategic hub for innovation and financial technology. Wood said Bitcoin has proved itself as a store of value and a way to protect against wealth confiscation. She said it had the potential to be a settlement network following the introduction of layer 2 solutions like the Lightning Network. But ARK is increasingly focused on Ethereum, having invested in Grayscale's Ethereum Trust and hired an Ethereum miner to its fintech analysis team. We're intrigued by stablecoins, and we're also very interested that developers are migrating very quickly to Ethereum. I always say to our analysts, follow the developers, let's see what they're doing, because that's a very loud signal, Wood told Whittemore. As for Musk, Wood said he would help Bitcoin miners to green their operations. This auditing of what miners, certainly in North America, are willing to do around how much of their electricity usage is generated by renewables is going to bring that topic into stark relief. It will encourage an acceleration in the adoption of renewables beyond which otherwise would have taken the place. As described in a recent Square Arc white paper, mining and renewables can grow in tandem, with Bitcoin acting as a battery to soak up excess electricity produced from intermittent sources like solar and wind, Wood said. Previously, the firm didn't see the potential to make big returns from solar and wind, but now that might change. I'm actually quite excited about it, she said. Wood also addressed the prospects for a Bitcoin exchange-traded fund to be approved in the US this year, which appears to some less likely after a string of comments from regulators. Wood thinks the latest plunge could be a good thing for the prospects of approval. Although her funds have taken a hit this year, with her flagship ARK Innovation ETF down more than 34% from its high in February, the firm's product lineup hasn't yet faced a monthly outflow, she said. There were a lot of commentators out there, shall I say, screaming about how our ETFs would have to shut down, which is impossible, she said. In fact, the move toward value sectors that's caused her funds to suffer is encouraging to her. The forces that the coronavirus put in motion supporting all of the innovation in which we invest that are not looking back. She said, we're looking at this, saying, alright, on sale, innovation is on sale. Oh, and by the way, the bull market had bottomed out. Tough talk against digital tokens from China and calls for greater scrutiny in Europe and the US have contributed to a slump. But Wood said the virtual currency is already on its way and it'll be impossible to shut it down. Officials will be a little friendlier over time towards cryptocurrency out of fear of missing out on the innovation provided by the sector, Wood said at the Consensus 2021 conference organized by CoinDesk. The most high-profile recent regulatory broadside has come from China, a push to rein in cryptocurrency mining that was partly triggered by concern over a surge in illicit coal extraction to deliver the power needed by the server farms underpinning Bitcoin. When asked how low the price of Bitcoin could fall to from its current level, Wood said, "You never know how low is low when the market gets very emotional." She added that a lot of traders see Bitcoin dropping below the 200-day moving average, which was at $40,000. So traders, once that happened, they just dump. Some just dump and run. Nonetheless, the ARK Invest CEO said, I think we are in a capitulation phase. She elaborated that all the indicators are all suggesting that we are in a capitulation phase, which is a really great time to buy no matter what the asset is. A capitulation phase is buy it's on sale. While acknowledging that some traders may continue to sell their crypto holdings, Wood emphasized, all of our indicators are saying this is capitulation right now. This is it for today, folks. If you enjoyed the video, then leave a like, and if you are new, then do not forget to subscribe. See you till the next video, and thank you for watching.